Money FM 89.3, the best of the afternoon update. The afternoon update with Lynlee Fu.
Money FM 89.3. You know, I just came across an article just this morning about Mastercard. It's moving deeper into the digital asset economy. Why do I say that? It's just launched new global capabilities to support stablecoin payments across its vast merchant network. This means merchants will now have the option to receive payments in stablecoins. How cool is that? The payments giant also says with this new global system, it aims to make stablecoin transactions as seamless as traditional payments. And with that, what better time than now for us to talk about stable coins? Welcome to Industry Insight, where we decode trends that shape the future of business and technology in Singapore, across Asia and beyond. I'm your host, Lynlee, and it's great to have you with us. Stablecoins, which are cryptocurrencies pegged to stable assets like the US dollar, have been gradually moving beyond trading venues into mainstream payments. This asset class has exploded in scale, utility, and relevance. Last year, stablecoins processed a jaw-dropping $27.6 trillion in transfer volume. That's more than Visa and Mastercard combined. And they're doing it fast, cheaply, and increasingly across the Ethereum and Solana networks. Joining us to unpack what this all means is John O'Loughlin, APAC CEO of Coinbase. John, welcome to the show.
Good afternoon, Lynlee. Thank you for having me.
Great to have you on the show. Let's jump right in. Very recently, an Italian minister said that the dominance of US dollar-backed stablecoins poses an even greater threat than Trump-era tariffs. That's quite a statement, isn't it? It really underlines how stablecoins are no longer just niche financial tools. They're becoming part of the geopolitical conversation. What do you make of that?
Certainly. I think in the first round of stablecoin adoption and development and acceptance, clearly there were a couple of large US dollar-backed and pegged stablecoins, USDC, operated by Circle, a partner of Coinbase, and USDC linked to Tether. And these stablecoins account for the bulk of that enormous jaw-dropping value that you just mentioned. In the case of Europe, Europe has launched some of the earlier digital asset regulation globally under their MiCA framework, but they're running a little bit behind in terms of where their development is with the stablecoin. And so recently, EUROC has been launched, a Euro stablecoin, and I think there's this concern more broadly as relates to traditional monetary markets, where they want regions and central banks want to have control over issuance, circulation, transactional oversight, and they want to facilitate remittances really designed around their cross-border payment systems. So I think you'll see a lot of development of other stablecoins. Singapore clearly has had a framework around this since 2023. A lot of the G10 currencies are pegged. This applies to a single currency stablecoin pegged to the Sing dollar. All these G10 currencies. China has had a position this for a long time with the ECNY, the digital renminbi. It's not an alternative to digital currencies like Bitcoin, as it's centralized and controlled by the PBOC, but the ECNY intends to compete with USD stablecoins. And even Russia, recently the finance ministry stated that Russia should be developing its own stablecoin. So I think we're seeing the same trends that have kind of unfurled in the TradFi world get repeated in this world of atomic settlements and incredibly efficient transactions provided by stablecoins.
And it's not just about volume anymore. We're seeing real momentum. I think Ethereum and Solana alone saw a $4.1 billion surge in stablecoin inflows in just a matter of days earlier this year, at least according to a blockchain analytics firm whose name escapes me now. But John, that tells us there's some serious capital positioning itself within these networks. What's driving that behavior right now?
I think, as you're probably aware, some of the trading volumes are purely trading positions and trading bots, and you see huge amounts of repositioning of portfolios driven by the same sorts of technology you see in traditional markets. But in terms of interesting utility that we're seeing from stablecoins, clearly the remittance space is a very exciting one. Major populations in Asia, for example, of migrant workers realize that they can get much lower transaction fees and much higher transaction fees by on-ramping and off-ramping with a stablecoin, moving their money between Saudi Arabia or Bangladesh or the Philippines, etc. You also have people just investing in stablecoins as effectively a real-time atomic version of FX trading. And so I think the advantage for the best FX traders in the world is really speed and their ability to respond to markets and movements. And that's where stablecoins have a huge advantage. A final development, which is particularly relevant in Singapore, where lots of large multinationals are based, you're beginning to see internal corporate treasury move money around either through listed stablecoins like USDC or the EUROC, or through their own internally developed corporate stablecoin to move funds between their different global entities. And so if you think of big marketplaces like Alibaba Group and Ant Group, my former employer, they've been moving lots of funds around the world globally in a stablecoin because there are huge efficiencies and gains to be made, and then they can avoid all of the rails and the costs that come with traditional wire transfers and banking TTs. So you're talking about coming down from 3 or 4, 500 basis points down to 30 to 50 to 70 basis points of cost, and it's real time.
Wow, let's unpack that a bit more. Now, Ethereum and Solana are often viewed as competing ecosystems, but they're both playing pivotal roles in stablecoin flows. From your vantage point, how are stablecoins behaving differently across these two chains?
Yeah, I think you're seeing some real kind of evolution of technology, and I think it's too early to say whether the race has been won, but Solana may soon dethrone Ethereum as the ultimate blockchain, and it really all revolves around the transaction speeds, who can have the highest transaction speeds, the lowest gas fees. So that's effectively the cost of transacting on the blockchain and driving the computation. And so when you get much more scale on a single blockchain, then things become more efficient. And also, we need to see where different developers and users are listing their projects and also looking at some long-term investments. There's this kind of narrowing of the distance between Solana and Ethereum, and I think a lot of it's been driven recently by Solana is now one of about 72 crypto-related ETFs waiting for approval from the SEC, and I think with a pro-crypto lead at the SEC, Paul Atkins, I think this is just a tailwind and kind of a favourable status in coming to support Solana.
Okay, picking up on that, it's fascinating to watch how network characteristics influence use cases. Ethereum gives you that security and depth, while Solana offers speed and accessibility. Is Coinbase seeing different types of institutional clients leaning toward one over the other?
We've certainly had an interest in the Solana ETF, and we've been honoured to be a custodian for most of the major Bitcoin ETFs and some of the follow-up ETFs with some of the other major tokens. We've made quite a bit on a project called Base, which is our own Layer 2 Ethereum project driven by a developer team and Jesse Polak. Mm-hmm. But I guess the caveat I would make, Lynlee, is that things evolve in crypto so quickly, I think you'd be remiss to kind of put the nail in the coffin for Ethereum or say that Solana had won out. And there may still be a role for both of them in the long term.
Okay. I've met Jesse before, actually, right here in our studio in Singapore.
Oh, wow. You sound a little bit more crypto native than myself, even.
Now, traditionally, John, stablecoins have been seen as tools for crypto traders, a way to park funds or hedge quickly. But today, we're seeing a much broader set of use cases emerge. What are you seeing on the ground?
I think in the case of Singapore and some of the Asian markets, some of the stablecoin issuers have offered very good kind of returns or yield on stablecoins. And one thing we see that differentiates users in Asian markets compared to, let's say, North America or Europe is their demand for yield. You'll have auntie or uncle, family office or institution, or even students who are traders in university or developers and serious into computing, move their funds around on a nearly day-to-day basis to extract the best yield from the offerings in the market. And so you even have some of the big Asian-based banks playing in this space, trying to promote stablecoins and offer competitive yield, because it's really competing with all sorts of asset classes. For example, stocks, private wealth, bank deposits, more alternative investments like private equity or VC, and ETFs. And so I think that's where the stablecoins have really kind of made an early mark.
Wow. John, I think that could really reshape how businesses across Southeast Asia handle cross-border finance. If you can reduce friction and settlement time, you're unlocking a whole new tier of productivity as well, especially for smaller businesses that are often priced out of traditional systems.
Yes, certainly. I think that's a great point. I spent a lot of time in China in the earlier part of my career, and talking to my colleagues in Singapore these days, we've come across some really interesting kind of utility examples and effectively solutions to challenges in TradFi that mean that certain parts of the economy are unbanked. If you think about fresh fruit wholesalers who are sending Australian produce up to China and Singapore for Chinese New Year, oftentimes these are very seasonal players. A lot of the produce providers are looking to get away from the big kind of market makers and the agents, and they want to go to their seller and their buyer direct. And so with a stablecoin, you can effectively do that between the buyer and the seller in markets anywhere in the world. If you can just be, transmitting and making your payment with that stablecoin. Oftentimes, these players can't get banked because they can't prove whether or not they're going to sell all their mangoes or their lobsters over Chinese New Year. And so there's not much visibility on their trade finance. And oftentimes, there are major changes in climate or weather conditions that can really hamper harvest. And so we need these really dynamic solutions for a much bigger part of the market that, as you just mentioned, are really underserved by big traditional finance. And that, I think, that's what excites us at Coinbase. Our mission is economic freedom. We really see that the whole, kind of world needs an upgrade of this financial system driven by technology.
Conversely, with growing reliance comes growing responsibility. What happens if a major stablecoin depegs in a region where it's used heavily? That's got to be a huge concern for regulators and institutions alike.
Yes, certainly. I think you've seen a lot of players kind of come in from the cold and really try to kind of clean up their act in terms of their governance and compliance. And so the hoops that you're going to have to jump through to register with the MAS and local authorities in Singapore around, their fintech sandbox and some of their reg lab environments and their framework for tokenization of stablecoins, they're promoting innovation and development, and they want people to tinker with new systems. But actually, the onboarding, the KYC, the AML, the counterterrorism financing, all of these things are taken incredibly seriously. And I think that's where we really draw from the experience of compliance in TradFi. And I think if a token was to depeg or do something untoward with how they manage their reserves and their ratios, you'd see just a huge loss in value in that token.
Okay, do you think regulators here in Asia are taking the right steps to create a framework that perhaps encourages innovation while also protecting the ecosystem?
Certainly. I see MAS were very early leaders. I think what we need to do next is launch a kind of national digital asset strategy and develop a digital asset working group that brings together the development of the national AI strategy, coordinate it with the digital asset strategy, and kind of have a working group with more private sector participation and cross-ministerial working groups. I think we've seen things to be a little bit siloed historically. And one thing Singapore Inc. is so good at doing is when they get their mind around a project, for example, family offices or semiconductor designing or whatever it may be, they really kind of hone in on it. And we think there's a great chance to do that with a kind of digital asset strategy. Sovereign funds, we believe, should be very much considering establishing a strategic Bitcoin position. I think we've seen that in the US, we've seen that in Bhutan, the Ukraine, a bunch of countries that have unique dynamics and positions that mean they're very akin to crypto. For example, Bhutan has very cheap mining hydropower, and the Ukraine has a very challenged payment system given the war that's been going on there. But I think more and more you're going to see a very conservative allocation to Bitcoin for a strategic amount for sovereign funds. that to me in 2025 seems to be a very kind of straightforward thing to be thinking about.
Okay, looking ahead, what excites you the most about the future of stablecoins over the next 2 or 3 years? Are we looking at an entirely new kind of financial infrastructure, perhaps?
Yeah, I think we need to get a mass of currencies kind of activated in a stablecoin environment. And then we need to get a mass of volume trading. And then once you get currency pairs working together, then the traditional currency markets that have existed in the TradFi world can take effect in the digital asset stablecoin world. And then I think you get a very big uptick adoption. And again, back to the mission of Coinbase, economic freedom, that then will just lead on to so many more opportunities.
Are you talking about specifically in Asia?
Yes, I think in Asia we need a couple of the bigger currencies like the yen, the Hong Kong dollar, the Sing dollar, some of the major currencies to really be playing with the other big currencies in the other regions, the euro, pound, the dollar, the Aussie dollar, the Kiwi dollar, etc. And you just need to look at the traditional flows and pairs of where people have traded currencies historically to see what we need to replicate in the stablecoin world. That being said, while all of this is happening, lots of little dynamic projects are going to keep popping up, and they may actually insert even currency trading as the use case. But right now, I think on-chain currency trading is really an exciting part of the future.
Exciting indeed. And what's next for Coinbase here in APAC? What are you building toward?
So in the APAC region, for us, that stretches from Japan to India. We have fully regulated businesses in Singapore and Australia. We're looking to re-enter the India market, where we already have hundreds of our teams based. A lot of the leading teams across cryptography, security, IT, payment technology engineers are in India already. That's a major market for us to be looking to launch a retail exchange in. In a lot of the other geographies, we have quite significant Coinbase Ventures portfolio investments and portfolio bets. And so a number of those we believe are going to be some of the leaders tomorrow in the digital asset space. And then also with Base Layer 2 Ethereum, that's received really big adoption in some markets, for example, Korea, the Philippines, India. And so we have both a go deep approach by being fully onshore with fully regulated businesses, namely Singapore, Australia, and India. We may explore getting back into the Japanese market. We're in that market previously, but had some challenges in that market. But really, India is the really exciting thing on the horizon for us this year, as well as significantly growing the Singapore business where you sit, Lynlee.
Excellent stuff, John. Looks like busy days ahead for you. Let's close with a quick rapid fire. Most underestimated stablecoin use case?
I think I'll go back with the one I mentioned around fresh produce for SMEs, particularly between, I'd say, developed and developing economies. If there's a buyer or seller there, and a buyer or seller in a more developed market. That's one that really excites me.
Country to watch in Asia?
I would be watching Hong Kong. They have a chance to re-up their regulation, but I think they're seriously contemplating how they could think about the next evolutions of their regulation. It's passed a number of rounds of various regulation. We certainly would like to think they can keep developing, then we could be doing more business there.
And biggest misconception about crypto in 2025?
That it's an off-ramp for every criminal and scam and fraud. I think, unfortunately, that does exist, but it exists to a factor of 7 or 8 times more with cash. And when you do have IP addresses and blockchain information, it's actually quite hard for nefarious parties to hide their behaviour. So we spend a lot of time working with the Singaporean police, for example, on fraud and scam cases. And unfortunately, that's something that's been a bit of a taint for the crypto brand, but I think we're moving beyond that.
John, thank you so very much. This has been a powerful breakdown of where stablecoins are and, more importantly, where they're going. Great insights. Appreciate your time. A pleasure speaking with you today.
Likewise, Lynlee. Pleasure being on.
John O'Loughlin, CEO, Asia Pacific at Coinbase, which is a leading cryptocurrency exchange, one of the largest globally, headquartered in the US. And to our listeners, if you found this informative, don't forget to check out our podcasts where you can find all our conversations and listen to them again. We are on SPH Media's audio platform, spelled AWEDIO. We are also on Spotify and Apple Podcasts. Remember to follow our podcasts, and if you like what we've got, please feel free to share and spread the word. I would greatly appreciate that. Okay, this has been Industry Insight with me, Lynlee. Keep it here on Money FM 89.3.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.